Hello, everybody, and welcome to a new episode of uh, Mu Digital Text of the Week. This time we've been more than a week, so we're going to review a little bit of what's been happening in the space, especially stablecoins has been a huge topic, and we're going to dig deeper into some of the news that's been happening, what's relevant, big things coming up. As last time, we have Patrick and we have Cholo, our co-founders, joining us. We're gonna have the same structure as before. I'm gonna ask them a series of questions. We're gonna take their takes from what they think, what their views on the news that we've been seeing, and then we're gonna have a space where we're gonna do a rapid fire session of questions not relevant to the topics, but to get to know them a bit better and see their takes on some of these things. So let's get started. We have a lot of topics we want to cover because there's been a lot of things happening. If you want to say hi, Cholo and Patrick, same as last time. We're not going to take. I'm not going to ask the question directly. Any of you can jump in. If I see there's a bit of hesitation, I'm going to call a name. So let's start with the introductions.
Hey guys, Mu GM, good to be back. It's episode 3. I think last time we spent a lot of time talking about stablecoins. Going further down the stablecoin rabbit hole on this one. I think there's a lot of interesting stuff happening globally, so happy to hop into it.
Likewise, Gmu. Good to be in front of everyone again and talk about what's hot in crypto, and that's stablecoins. So back to you, Jose.
So let's dive straight in there. We're gonna go with Genius Act, and this has been something huge. This has been passed. It's not yet approved. It's gonna go to the next legislation, but this is an act passed by the U.S. Senate. I believe got 66 votes, so it's gonna go to the next round, and there's a lot of controversy. There's a lot of layers going in here. A lot of people are super happy because this the first step into crypto regulation. There's a lot of political things going in the background. A lot of people not happy about this, and because there are some takes that we're gonna dive deep, dig deep in here, as the name says it. So if anybody doesn't know what Genius is a way to US tries to legislate that any stable coin would have $1 per stable coin. So if you want to have I don't know, if you're a stablecoin issuer, you're going to have a reserve of the same amount of dollars. So one for one, which current stablecoins have been scrutinized that they do not have these reserves. So let's take your views. What do you guys think? Do you think this is positive overall? Do you think this is gonna go all the way? Tell us a little bit about how you see the Genius Act.
Yeah, maybe I can start. For those of you that are not as familiar with my background, I'm originally from the U.S., so very familiar with the political process. And as Jose mentioned, it's definitely a lot of controversy, and there'll be a lot of twists and turns before this finishes. I think you cannot separate just the process itself from the issue, unfortunately, in the backdrop now. But I think, from my perspective, it's positive the way that these things are moving through the Senate. It's definitely not a done deal. The U.S. government has multiple layers of checks and balances. This bill has advanced through the Senate, but there are other rounds it needs to go through, namely the House as well for different approvals. I think it's positive that there was a bipartisan push to table this, to put forth. And I think at this point, we do have a pretty good perspective of the types of things that will be in the bill, which are very instructive. I think as a side note, what is interesting is, Genius Act is the one that's getting all of the publicity right now. There's actually multiple bills that have been pushed in terms of stablecoin legislation. The other one's called the Stable Act as well. But from everything that we're seeing, the pundits are optimistic that this will get pushed. It's just a question of, how many twists and turns and sort of, the timing of it. I think, Jose, to your question, to me, there are kind of 3 different things that I look at in terms of what actually is coming out substantively from the bill. I think, predictably, all of the legislation is drafted such that it's intended to maintain U.S. leadership on the evolution of stablecoins. First and foremost, reserves must be denominated in U.S. dollars. And I think a lot of people in crypto take this for granted, but it's not a given that stablecoins would be backed by U.S. dollars. I think that is how the market is today. The reality is, the lion's share, probably over 90% of stablecoins that are in circulation are US dollar denominated. But from a policy perspective, what the signals is that the regulators are using this bill and stablecoins in generally as an economic tool. And it's an economic tool for the US to maintain US dollar dominance in the overall finance and macroeconomic backdrop. The U.S. has long been the dollar has long been the reserve currency of the world, and this legislation is intended to continue that trend. So there's a number of political plus geopolitical implications to this, which we can get into in some of the later segments. I think the second one, which is actually a big deal, is the requirement is that all issuers in the US of stablecoins now will fall under the regulatory purview of one US regulatory body. Basically, if you're not issued the license to be a stablecoin payment provider, you're not going to get it, which historically, in the way that the stablecoin industry has been growing over time, you've had the combination of the ones in the US that were regulatory compliant first. You've had a combination of other ones that came up from sort of the Web3 DeFi sort of background. The latter basically have been regulated out of existence. The corollary to that is the reserves. Like, how do you back these stable coins? And essentially what the bills do say is the only thing that's going to be accepted are US dollar cash and cash equivalents. So things like bank deposits, short-term deposits, US treasuries with duration less than 90 days. What is the implication of that? This is actually very interesting to us because as Cholo and I had looked at different types of constructions over time, there was a period of time, like not that long ago, when yield-bearing stablecoins were very attractive, and a lot of people were looking at that type of product construction. And yield-bearing stablecoins meaning they were backed by assets such as credit, private credit, other types of assets which do not fall in this bucket. So for anyone in the US that's trying to build a stablecoin and had plans for a yield-bearing stablecoin, effectively this bill kills all of that product construction. So a lot of interesting implications. Maybe I'll pause there. I'll turn it to Cholo and we can go deeper.
Yeah, I mean, on an original question of is it positive or is it negative in crypto? I mean, I think 100% is positive. Like I came into the cycle in I came into crypto in 2016, 2017, like when it was even a struggle to on-ramp onto any centralized exchange. You kind of had to do this weird backflip where you had to go buy USDT somewhere. If you were in kind of a friendly jurisdiction like Singapore, you had banks that would allow you to at least fund a Gemini account, for example, or a Coinbase account. If you were in a less friendly country like the China or the Philippines, you really had no other choice. You had to go do OTC buy USDT, deposit that into your Binance account, and then you can start trading. Now it is a recognition that blockchain is useful. So the recognition that some of the things that blockchain has created, which is stablecoins, are useful, and it's a recognition that they are now economically a force to be reckoned with. So I think we sometimes kind of like are too narrow in terms of where we see like the current day, but kind of just like looking at how far we come from like a niche industry that no one really paid attention to as recently as 7-8 years ago to now having a bill to legitimize this important piece of Web3 infrastructure is huge. But of course, people will quibble about what it should look like and what it now looks like. But at the end of the day, regulation always is behind innovation. And I think even stablecoins themselves were a particular crypto innovation that essentially has now shown as useful beyond just crypto applications. So I guess, yeah, I would see this as more of a challenge to builders, actually, to build on top of this strong regulatory clarity, strong like rules of the game being set, and do what we do best, which is innovate on top of it. And like Patrick said, I think yield-bearing stablecoins will likely morph into kind of like stablecoin yield protocols. Not every project needs to have a stablecoin, and I think it's going to be an interesting kind of like design space to build around in the next couple of years.
Yeah, I can see the benefits, but who do you think is going to be the benefit the most? I mean, let's start with the name, like uh, guiding and establishing national innovation for the US stablecoins. This to me sounds kind of like Dutch. You use these acronyms and you give it a name, so it's catchy, and then people resonate to something. Is this going to be like beneficial for US, as Patrick was mentioning? There's a macroeconomic, keep the USD as the stable coin in the whole space, or is this going to be deeper? President Trump had the USD1 launched by one of his financial companies. Is this going to be one of the main persons, well, to be benefit by this? Or the whole space is going to be benefit by this? Do you think there is many things happening in the background that is going to benefit a few instead of the whole crypto space? Or could this be done on a different way to benefit more people?
Well, I think what's interesting is if you put it into the context of just the way that the industry has been built up today, there always has been a bifurcation between the players that were building for US regulatory compliance and others that weren't, that were building for other parts of the world. And even if you just look narrowly at stablecoins, over 80% of the volume of stablecoins is two players. Tether by far is the largest. They are not operating under US regulatory regime. And the second is Circle, who we talked about a lot in the last pod, who have always, they've started with, we are US regulatory compliant, we are a US company, we're building for regulatory rails. So if you're just talking about who's out there today that benefits most from this, it's definitely Circle, because it validates everything that they've been doing. It supports their thesis in the IPO that, once you have a very strongly regulated background and they're building that way and they have the support of the government, in terms of just narrowly the stablecoin space, I think that that's who benefits. Where, as Cholo was mentioning, as a founder for us, and we're based in Asia, right? But what you always want as a founder is you want to know what you can do, where you can do, and what's the appropriate way to build. I think what's been very challenging for a very long time in crypto, just looking across the globe, is lack of regulatory rails, and that's also natural. It's a feature of the tech innovation cycle. Tech and builders always move faster than the regulators can. But for crypto, it's a positive in the sense that it's being validated. The fact that the vice president of the US was at the Bitcoin conference in Las Vegas, last week, that is huge. That never happened before in the past. So I think net, it's all positive. It helps the whole space move from sort of, a crypto funk, like niche space, to onboarding more masses, which at the end of the day, of course, we should maintain the values and as much as we can of the original ideals of Bitcoin and of the space. But you have to onboard normies. And the only way you can onboard the next generation is through things that are regulated and things that make people feel safe.
Yeah, I think it's, I guess, on a question of who benefits, and I did think it actually benefits builders the most. So again, also kind of harkening back, the main reason Circle and Tether essentially came about, like their genesis, for those who are not familiar, they were both essentially stablecoins that were created by centralized exchanges. So USDC was created by Coinbase initially, and Tether was created by I think Bitfinex initially. And the reason they were created was essentially not because people thought that people wanted a digital version of dollar. It's because people wanted to trade Bitcoin, and they needed a stable unit of account to be able to do it. And there was a very difficult time to get dollars on board. These entities had difficult times having to create bank accounts to kind of manage the in and out of money. So they created like, why don't we just create a stable coin that kind of mimics the dollar, but people can trade Bitcoin off of it, so that every time they sell their Bitcoin, we don't have to give them fiat in their account, because that's going to create a huge regulatory headache for us. We just give them a USDT, and then when they eventually want to off-ramp it, we'll give them the real fiat. So it was essentially created as a tool of necessity, because people wanted to trade Bitcoin, people wanted to trade Ether, but it was such a headache to manage liquidity that these OG centralized exchanges had to create this stable coin to essentially facilitate trade. What what essentially the Genius Act does is that it clarifies the on-off ramp like infrastructure, so that to me it actually benefits builders in the US the most, because now they have this massive infrastructure that's built out for them that is global in nature from day one, very liquid. Lots of institutions are plugged in, and you can create all sorts of stablecoin based businesses that essentially could short circuit and jump over and leapfrog all of the traditional financial infrastructure. And that allows you to create very useful consumer use cases. You can create lots of like neobanks with barely touching a traditional banking rail. And I think that's quite exciting. But I do think that, to Patrick's point, here in Asia, it's less exciting in that sense, because like payment gateways and payment rails through the Visa MasterCard system have been existing for the longest time. Like stablecoins doesn't really change that. It maybe makes it cheaper, but for the most part, it still runs on the old clunky infrastructure. So to me, I think DeFi still has more room to run here in Asia because there's still more inefficiencies. But I think it's net very positive that more and more issuance and M2 will flow on chain. And once that's on chain, it's much harder to bring back out because it's one more efficient financial infrastructure. So that's where kind of DeFi can step in and say, okay, thanks US for onboarding all these like liquidity onto the space. Now let's take that and run with it. That to me is the biggest benefit as a builder and as builders here in Asia in particular.
And how feasible do you think is gonna be to have one back one, like $1 online, $1 real? As we all know, banks do not have this. Like you like to think that the bank has my money and I can go and take it and we can all do that, but in all reality that cannot happen. Do you think with this regulation things are going to change and there's going to be a stable coin for a dollar for each stable coin, or especially if the banks can become issuers of this, or is just going to be a inflation, extra way of inflation for US dollar?
You raise actually a very interesting point, because in crypto and in Web3, this is the difference between a stable coin, which, as Cholo pointed out, was always meant as a store of value, which is why you needed a one-to-one backing. What does not exist yet on crypto, that is the reason we're building some of the things that we're building, is credit and the rehypothecation of risk and actually the creation of credit, which is actually the money multiplier is a very basic feature of any financial system, any capitalist financial system. It does not exist in crypto. I mean, there are a lot of primitives that are trying to build it, but I'm just saying at scale, nothing has reached the sort of PMF or the sort of acceptance in a way that stablecoins have. We think that there are a lot of builders in the space, and we hope we're a part of that story as well, that helps to create, this shifting of credit creation on chain. But stablecoins as step one, this was at least from a regulatory perspective, this was not the intention, and it's not what they're trying to do. In fact, what happens behind the rails is the reason why it's great for the U.S., at least for the Treasury, is because who becomes the biggest buyer of U.S. Treasuries in a macro environment where it's given what's going on in the economic position and the fiscal position of the U.S., maybe there are less buyers of Treasuries today than historically they had been. Crypto steps in to be a huge buyer of U.S. Treasuries. So it's, to your point, it's a huge benefit to certain players in that market, but to crypto, there's a lot of innovation to come.
Yeah, the one-to-one backing. I think this is the people the other part that like people gloss over when they look at the Genius Act. Essentially, what the Genius Act kind of does, because it kind of mandates that one-to-one backing, is that it kind of like furthers this concept called the narrow bank concept. The narrow bank concept is basically back in the current day, like these banks are huge. They do everything. They handle payments for you. They handle your current account. They kind of lend to the economy for you on your behalf, because they just have the heft and the whole kind of like the scale to be able to do that. But what the Genius Act is essentially, this is like big in tech back in the day, like they unbundling. It's an unbundling of banks, and stable coins are essentially the first step of that, where you take the payment responsibility of banks, and you take that out, and you take that as okay, that other people can do this more efficiently. You just need they can manage liquidity better. So you banks, you go do what you're meant to do, which is promote growth in the economy and be the credit facilitator. So I think that's where I think it's quite exciting. Where what this creates is creates this base layer of trustable and composable money that people can build on top of. And to Patrick's point, what we're building essentially is kind of like taking that narrow bank concept a bit further, and where, well, why does lending need to be the bank's own kind of like a regime? Why can't like a very focused lending protocol built on this network of money able to compete or stand alongside banks in that space? Because at the end of the day, the borrowers off chain or on chain even, they don't really care where the money's coming from to a certain extent. They care about is the price. Is it cheap, and is it, can I get it fast enough, and can I get enough of it? And I think that's where this whole movement is slowly moving towards. It won't happen overnight, but it is going to happen, and it's exciting to be building this space. And I think that's where this is like the first step of kind of unbundling banks and letting more innovation come into this very old legacy infrastructure.
Absolutely. I think this is getting deeper and deeper, and I love that. I want to jump into something that Patrick mentioned, which was the event that happened in Las Vegas. And there was something that really created a spark on crypto. And it was mentioned that Trump supports the buy bill for 1 million BTC. This is huge for the space. I think having those reserves on US would make them one of the largest holders, and it would change a lot of the perception of BTC as an asset, like globally. What do you think about this, and do you think there is a hidden agenda, and how is this related to the USD, the stablecoin legislation that we were just talking about?
You want to go first on this one, Cholo?
Yeah, I'm just trying to gather my thoughts. I have mixed feelings about the US kind of like taking up such a large proportion of the BTC supply. I mean, if you look at kind of like the amount of BTC supply already held by US and US allied institutions across Michael Saylor, across BlackRock, although I wouldn't say that they're fully US, but across those two, and then in the US, you're essentially looking at quite a large concentration of Bitcoin in the hands of essentially just one potential state actor. And I think that's always been anti-Bitcoin ethos. I'm not like a super BTC maxi, but I do believe that the decentralization of Bitcoin is the biggest kind of like thing going for it, that makes it very anti-fragile and very, very tamper-proof. And basically, if we look at kind of like how quickly like BlackRock and Saylor and potentially the US have acquired Bitcoin at the pace, they basically were able to mop up like more supply than the miners combined in the last 2 to 3 years, and that's quite concerning, I guess. So I, for one, I'm not selling my Bitcoin, because I don't believe in. I'm not even selling my Bitcoin to buy IBIT, for example, because I believe that Bitcoin's strength is in its decentralization. But what I do think is that once the US kicks in motion this Bitcoin treasury reserve for governments, then every government would be looking at following suit. Because I mean, I would say that even the most staunch non-believers in Bitcoin from a government standpoint would not be able to ignore it once the US starts buying up this asset. It's different when El Salvador is doing it. It's kind of like a smaller country, not barely on anyone's radar. But once in the largest economy in the world, they start buying Bitcoin, for sure everyone's gonna follow. It's like an arms race for gold, essentially. And now every major central bank has gold reserves in its war chest.
I would echo everything that Cholo said. To my view, short-term pain for potentially short-term gain for potentially a lot of long-term pain, because fixed supply, once it becomes a tool for a financial tool for governments to interact how they run their monetary policy, especially with what's going on right now. I mean, there's a whole discussion, and we kind of talked about this in the past, about de-dollarization and sort of, how the need for other assets outside of the US dollar. And these are trends that happen over many years, right? So, but Bitcoin is now in that realm of assets, which is seen as a store of value at a sovereign level, which of course is fantastic because the whole industry created something that has real value. But once it gets starting snapped up by all the players, which are the reason why crypto exists, or Bitcoin in particular exists in the beginning, that's against the ethos from which it all started. So yeah, mixed feelings as well. I echo Cholo's sentiments on this one.
And how do you think this is related to the stablecoin act, and how this really affects stablecoins overall?
Yeah, I mean, I would say only related insofar as there are a number of different regulations happening in the US that are wrapped up in sort of this digital asset, let's regulate the space. And, Bitcoin is a part of the federal treasury, is one component of that. I wouldn't necessarily directly link it to the implications for stablecoins. However, I do think it will get horse traded around, just the way that all political bills get horse traded around the US. So I do see them as different. I think that the more broader positive trend is the fact that these discussions are being had, and serious discussions are being had, and they're actually constructive now, whereas for many years they were not constructive in the US. So I think all of that's positive. But each particular piece of the bill, I think, has different implications on different players and different parts of the market.
Yeah, I mean, I think the only thing I add is that it's interesting how, I mean, the stance of the U.S. essentially is they want to regulate and want to. I mean, Trump's said it out loud many times, right? We want the U.S. to be the winner or the champion of blockchain and crypto, and I mean, it is really a very high. I guess it's like at the very high level of it. It is kind of gonna be interesting to see how the industry reacts. I think the de-dollarization trend has been going on for quite some time. I think even this year, I think the dollar has had its worst first 6 months of the year since for a very long time. So I think that isn't also that's also kind of like part and parcel of this ongoing dynamic. Like, sure, stablecoins might be around for a long time, but the question is are they going to be dollar stablecoins? Are going to be stablecoins backed by some other asset? Like you've seen kind of the resurgence of like on-chain tokenized gold as being one of the kind of like standout movements in on-chain assets, and I think that's gonna slowly become a thematic of its own. Like, how are people on chain storing their wealth? For the longest time, with a strong dollar and with U.S. rates being very competitive to the rest of the world, that used to be USDT and USDC. Is that going to be Bitcoin and tokenized gold in the future, or some other form of harder, less kind of like politicized asset? I think that's going to be interesting because while store of wealth on chain is a clear use case that, or the clear PMF that stablecoins initially showed to the world, that wealth doesn't need to be held in US dollars all the time. And the stronger the US pushes to regulate this industry and have regulatory capture beyond the US borders, I think that the faster you'll see that acceleration of moving away from USD as the main asset in crypto.
Thanks for that. Before we move to our next question, I would like to ask all our audience that I see a lot of familiar faces in there. Please help us by sharing. Share this post so we get more audience. First time we got 500. Right now we're sitting in 166. So make sure you comment. We can read your comments. I'm not going to ask the questions, but we always read and appreciate all the feedback. Take 2 seconds and share the live session so we can spread the love a bit broader. Our next question is going to move to something that we talked on episode 2, which is the IPO or attempt of purchasing Circle. We talked deep into this, and we want to see if there's any updates. We've seen some news that there's been saying that it's not gonna happen. The IPO is gonna go ahead, and Circle is not for sale. do you want to tell me a little bit about some of the updates that you've seen happening in the space, and what are your takes? Have you changed anything from last week, and how do you think this is gonna move ahead?
Yeah, no, I mean, we said in the last pod that this is the type of drama that deal professionals like us love to watch. And so to relate it to what's publicly been said to what we think, or personal view, it's not. So what Circle has publicly said is, we are not for sale. We are going to proceed with our IPO, which they had filed their S1 in the US before the Ripple, or at least publicly, before the Ripple acquisition intent was made available. Since then, there are also rumors that Coinbase has come in as another potential strategic buyer. And of course, there are already ties between the two entities, as Cholo mentioned earlier in the podcast. So from a deal perspective, this is actually playing out the way it's supposed to play out in public, because there's, especially in the US, it's a very regulated regime, and what can be disclosed at one time, depending on what sort of formal documentation has been served, and because especially in a backdrop where they're filing from an S1, everything has to be above board. Everything has to be completely disclosed at the appropriate time. It is the normal playbook for any company that has received an acquisition offer. You will always say, I'm not for sale. I'm not for sale. Your price is too low. Of course, you would say that, because what you want to do is, is negotiate for a higher price. So publicly, this is everything that they've said, and that is where it stands today. Relating that to what we discussed in the last podcast, I don't think that or me personally, I'm not at all surprised in terms of, how this has gone. The $5 billion valuation that was offered, at the first one, it is almost identical to the price that the investment banks were underwriting for the IPO. So then it really becomes a question of, the only reason that you wouldn't proceed with the IPO is because you don't really have intent to continue running the business, and you are comfortable with another player coming in and taking over your legacy, quote unquote, and cashing out and ending. I didn't think that this is something that Circle was ready for at that point. I thought that if the offer was something like 10 billion, that's a different discussion. But at the exact same valuation, it didn't make sense to me back then. And it was even more telling to me when the news came out that Coinbase also was another strategic bidder, because in M&A, what that basically is if you receive an offer and are not either surprised by or not very comfortable with the potential acquirer, you will go out and you will look for other potential suitors. And in this case, it's a related party. We call that a white knight. So, Circle went out, found their white knight. They didn't do anything, but at least they had options. They had a plan A, they had a plan B, and they had a plan C. I personally, I love this. Like, I love to see this drama. For the basketball fans, this reminds me of, Kobe Bryant, like in the finals one year when they were up 2-0 in the series, and then the reporter asks, you're not smiling. Like, why aren't you happy about this? And he said, job's not done. We're not done yet. So that, to me, like, this is what that reminds me of, for the Circle team, that they don't think the job's done. They want to keep going public. And personally, as a founder, I love that.
Yeah, I mean, I think that since we last kind of had this call, like, I think we've seen kind of like also a rebound in terms of the equity markets. So I think that's always kind of like the other countervailing, I guess, argument. I think the markets are doing a bit better. I think you are looking at kind of like the Nasdaqs, the Qs, almost at a cusp of like recovering all-time highs, right? And that's crazy. Like we were like in, oh, everything's over, we're gonna go like the drawdown, we're gonna be like in a very long recession, just barely like a month ago plus, like in the start of April. Now we're like knocking on all-time highs, and I think that's just it is crazy. I think it goes to show the liquidity situation globally. But it does create a very fertile backdrop for Circle to go and launch this IPO. So I think all of the factors that Patrick mentioned probably played into this kind of like pivot in terms of strategy. But also I think the strength of the market just makes, I would say that when I was here and I said like, oh, you had a sure deal in hand at like 5 billion a couple of months ago, versus now you get to gamble with the market and see what market gives you back. I think it's a very different kind of like calculus, I would say, from an IPO standpoint. And I mean, that just goes to show how capital markets change by the day. So as Patrick mentioned, you want to keep all these options live. You want to be able to pull on the string that gives you the best outcome. And I do think that the public market backdrop is at a much different standing now than it was like a month ago. And I think this is the right call. If you ask me, it is a strong market for IPOs. You've seen a whole host of these crypto related Michael Saylor at MicroStrategy clones coming out, announcing backdoor listings, announcing even GameStop announced a huge Bitcoin treasury buy. And I think, yeah, the market is ripe for more crypto adjacent stuff to come on stream. And I think it's one that you want to slip into if you already are pretty much pregnant with an IPO and just have a few more steps to clear before you can go out.
Something that catch my eye is that they have filed a registration statement with the SEC, and until this is not effective, these securities cannot be sold. Is this something like a standard procedure and it's just going to be a tick in the box, or is something that could be a game changer and suddenly there's going to be drama and they are not allowed to sell, go on the IPO? What do you think is going to happen? It's just a normal procedure?
Cholo, cap markets guy, you want to go?
I'm not too familiar with the U.S. Regulations actually, but I think what that means is that it just provides them a kind of like there is some kind of like process in each market where you essentially have to have a sort of a kind of unused blackout so that all investors are able to consider all the information appropriately. As Patrick mentioned, every time an acquisition comes in, you have to disclose that, and that's a material transaction for all of your existing and potential investors to kind of take on and digest. So every time that there's a fresh information that comes on stream, then you have to kind of refresh your filings. Then you have to kind of let the public and your underwriters kind of like get that through, like get the word out, people understand it, digest it, and then after that you can start with your marketing. So it's not dissimilar, but it's a bit more complicated than, say, like, remember when Bitcoin ETFs were coming on stream, you had them file S1s, they went through an approval process with the SEC, and that kind of took its time. Like ETFs arguably are much more straightforward. It's more focused on the mechanics of the ETF, make sure that they're done and designed in the right way in terms of what you say in your registration statement. With like companies, it tends to be a bit trickier. So it's just a process, I would say. But similar to the ETFs, once the S1 is kind of like approved, and then you can kind of set a listing date. You can line up all your like trading underwriters, market makers, all that to be able to prepare for a listing, and you can set your price and all that kind of stuff.
Yeah, I would just add from a US perspective, it happens. I wouldn't say frequently. It depends on how the market is, but filing an F1 or an S1 doesn't marry you to that outcome. If you don't like the pricing, then you can always pull the plug. You can save that filing for, on the shelf for if you want to wait the markets out for, a certain defined period and come back. So I think that it's a very, very strong intent. That it's a very, very strong of intent that this is what they were looking to do. I think what's interesting as you related to the M&A offer is the amount of information that's disclosed on an equity S1 filing is typically a lot less than if you had an acquisition suitor that you decided you want to engage with. So I don't know exactly how this one played out, but one scenario that might have happened, if it's true that Coinbase was seen as a white knight Circle may have provided a lot more information in terms of their own set of financial projections, what they thought was realistic, which therefore Coinbase would have a better perspective of what they actually thought the value of the business was, versus if you were dealing with a bidder that maybe you didn't want to engage with, you don't have to share any of that information. So there's always different levels of required disclosure depending on what the situation is. But to answer your question, it's just because they filed their S1 doesn't mean that necessarily that has to be the outcome.
Fantastic. I always hear anything crypto on SEC. I think it's going to be trouble ahead. So there's always hurdles, I would like to ask you, what do you think they're going to do with the funding? If they get 600 million after IPO, what is this for? Do they need it? Are we gonna see any revolution on USDC happening after this, or this is just gonna sit in their treasury for a long time? Do you think this
Yeah.
is needed?
Yeah, usually what happens, and what's out in the public, that is that if they get the valuation that they want, which is around US 5.4 billion, it's about 600 million in proceeds that will go into the business. For a company like Coinbase that's been VC funded and has many investors prior, this is seen as a partial exit event. So part of the proceeds of that 600 will go to early investors, and that's normal. That's sort of any, whether it's crypto or any Web2 company, that's normal for that to be an outcome in a quote unquote exit event like an IPO. But then the question, yeah, to your point, is the other part of the proceeds, what are they doing to grow the business? Let's assume it's like 50-50. I actually haven't really looked at the split. I'm not sure exactly what the split is, but let's just assume 300 million is for growth in the business. I mean, that's a tremendous war chest to expand in different markets, to compete. At the end of the day, it's how do they compete with Tether, who by far is the number one leader in stablecoins today in terms of TVL. Whether that's different market expansion into different access, whether it's scaling their operations in different places. So it is, the funding is used to compete harder, and they are the number 2 player in the space. So hopefully those funds help them, from their perspective, help them close the gap and eventually become number 1. I mean, that's what they would intend.
I mean, the other thing that really unlocks IPO, when IPO unlocks much more so than M&A, is it just creates more, beyond the initial fundraise, it just creates more firepower. Like basically, you now have a listed entity. So it's not dissimilar to a token offering, because now you have all of these companies go IPO. They do have what's called treasury shares, but also they have like a general mandate to issue more shares, and that essentially allows them to continue raising money from the market through private placements, through negotiated deals with investors. But because there is a liquid secondary market for those shares, you are able to build this kind of war chest of funding you can call on if you need to digest a big M&A, big acquisition. I mean, that's one of the reasons why Coinbase has been very actively able to continue to fund its acquisitions despite not having like a token, which is like how we in crypto look at exit events for companies. So I think for a company like Circle, which is not necessarily a token play, but is very crypto allied, it opens up all sorts of funding avenues for them that allows them to digest bigger and bigger M&A, if that was the strategy. Because that's one way to, I mean, Patrick would know more about this, but the best way to kind of like really grow quickly after a big liquidity event is through acquisitions, rather than trying to grow your way out of it and try to build everything from scratch.
And this last question regarding Circle, it's gonna move us into our next topic, which is other stablecoins outside US. Do you think this investment, or even taking out this investment or this money that they're gonna get after IPO, would Circle be in a good position to be one of another cryptocurrency stablecoin issuer? Like, do you think Circle could launch Euro stablecoin and be the player that has more than one stablecoin? Would you trust a company that is like the big player on stablecoins with multiple stablecoins, or would you like to see a new player issuing, I don't know, the Hong Kong dollar stablecoin or Euro stablecoin? Do you think this is a possibility of happening?
It's actually an interesting way that you've phrased the question. The reality for any entity that wants to launch a stablecoin that is not a US dollar denominated stablecoin is it will require all of the regulatory approvals within that jurisdiction. So just to use an example, if Circle decided that they wanted to issue a euro-backed stablecoin, it would require them to go through the entire MiCA process. MiCA is a European framework, and receive all of the requisite requirements that they need in that market to distribute and back their asset with the euros as the collateral. It doesn't I mean, does it make them, if you're a Euro regulator and you say, hey, I'm Circle, I have all these things in the US and now I want to bring it here, does it help them from a quote unquote fit and proper, and are they the right type of entity that they'd want to engage with? Yes, on the margin that does help, but whether or not that is a strategic imperative of Circle, to be honest, I don't know that question. And the reason that I say that is because we've on record said a lot that RWA, or real world assets in general, the heavy focus has been U.S. assets because by and large it is the largest market for financial assets. And typically, when you look at other markets such as Europe, such as Asia, where we are, there are different players that tend to be stronger in those markets because localization matters. For Circle to come to Asia and want to issue, what are the big financial centers? A Hong Kong dollar stable, the Singapore dollar stable, yen stable, RMB stable, like hard. Like, I'm not saying that's not possible, but it's fighting a different battle. I mean, Cholo and I experienced this, both having worked for investment banks that had US based or New York based headquarters, and they do, like, some of them are stronger in certain Asia jurisdictions, but in many jurisdictions the local guy by definition is always going to be stronger. So it's never a winner take all, particularly in the financial market. I think the other parallel to that question, which I think is a very interesting discussion, and Cholo touched on this a bit earlier in the pod, is when do we start to see stables that gain traction that are outside of US dollar? The data today is that none, really, like none. There's no, I mean, and there are pilots all over the place. Euro, where we are, Singapore based, Hong Kong based, China for a long time has been looking at, different, they're a little bit different. They look at CDBCs and different things, but the data tells you that within crypto, none of these have mass adoption. In fact, things like gold-backed stablecoins are actually, they're pretty decent, like what Paxos is doing there. So that, I think, is what's interesting, and I think that's what's developing very quickly across, particularly we see it where we sit in Asia, is all the large financial centers are trying to figure out how to create their own frameworks which promote their own local dollar stablecoin.
Yeah, I think the big question for Circle is like, what's going to be the play? Like, is the play going to be to continue to be? I mean, to me, the obvious play that they're going after is really being able to facilitate cross-border payments and just payments in general, and that essentially kind of like really means that they're going to go after becoming more like a PayPal or like MasterCard, Visa, where they have this extensive payment network across the world. I mean, the tricky thing is, like, if you look at today, like there's a lot of these like fintechs that do kind of like spend with your crypto, right? Put your crypto in a wallet, issue a debit card off it, and pay off of it. The reality is that no merchant, especially in emerging markets, is actually equipped to handle crypto out. So how that actually happens is that your wallet, the wallet provider takes your crypto and then sells it at a spread. They take that USDC that comes out, and then they go and wrap that in a card payment. So actually, at the end of the day, what actually still registers as a payment in the merchant's merchant's kind of like cash register is a payment from Visa or MasterCard. So, and that's essentially how Visa and MasterCard built out this network, because they have very strong local merchant acquirers in each of these countries, where these merchant acquirers literally go door to door and say, hey, do you want to sign up your POS as like point of sale machine to Visa or MasterCard, and then that plugs into the whole network. So I think that Circle, if they want to employ this strategy, they have to work with local kind of like players that have this network they can plug into, because their holy grail, I would imagine, is for merchants all over the world to accept USDC as actual payment, not just a wrapper in the Visa MasterCard system, but stable coins on the back of it. That's a holy grail, but they'll have to work with local players. And I think for them, it's like a partnership game rather than trying to compete in each of these markets. It's like, yeah, if there's like a big Hong Kong dollar issuer stable coin, if there's like StraightSex here in Singapore, you partner with them you go and work through their network. So you're like kind of the settlement layer, and you plug into each of these various settlement layers in each of the localized countries. I think that's going to be the play. And then as more liquidity flows to these local players, they will also start spinning up their own. I imagine they'd start spinning up their own local versions of stablecoins because they're still handling end of point of they're still handling last mile payment in their own currency. That which will create actually a lot of liquidity for them that they'll want to hold in their, and to manage liquidity, they'll hold in their own stablecoin, local stablecoin. So actually, I think that that in itself will just naturally pump up the liquidity of all these like nascent stablecoins because you're essentially having utility for them and not just being another on ramp into trading Bitcoin. It's actual payment utility and actual real economy utility.
And I think we already touched a lot of what I wanted to move into the next questions, which is the views of other stable coins. What can we see happening? We don't have news to analyze because there is no news, but there is a lot of players wanting to see this. People that want to see another stable coin from another countries, another fiat stable coins. What do you think, apart from localization that you've already touched on, like what do you think needs to happen for this to actually be the next thing in the space?
Two things, because it's always the supply side and the demand side. On the supply side, it is not yet the case where, let's just take Asia where we are. I mean, the large financial centers forever, Hong Kong and Singapore are always competing with each other for, the financial center of Asia. Both of them have stablecoin bills that are being discussed. Hong Kong actually within the last week has just released, their set of legislation. What I find very interesting with that is very similar to the Bitcoin ETF. Once the US puts something on paper and we're discussing it, Hong Kong follows, fairly rapidly. So I'm not saying that, everyone has their own imperatives. What I am saying is that people do look to the US in terms of what's happening in the financial system, and they don't want to be so far out of whack that, that what they're proposing is out of what other, at least what the US is doing at this point in time. So part of that is with Hong Kong just taking, because they actually have something in writing. What does it want to do? It wants to promote Hong Kong dollar backed and RMB backed assets. And it is very much the playbook of, Hong Kong, / China, put aside all the geopolitical stuff. But Hong Kong always is sort of the financial innovator and the test center. So you run these tests, in a sandbox with verified players, and they have tapped all who those people are within Hong Kong, and you run pilots and you see how it works. You see how it works in real world use cases for payments, for remittances, as a store of value, potentially as a tool within DeFi, which we hope that's where everything goes. But it takes all of that, and this is a long process. I think very positive that Hong Kong is moving there. I think we're very eager to see how Singapore responds to that, and what gets formalized. So the supply side takes long. Finance system, it takes a long time to innovate, and the fact we even talk about innovating the finance system is, as we said, is a positive to begin with. But then, as Strollo was mentioning, the demand side matters just as much, because if no one's going to use this, if there's no use case for it, doesn't matter. Innovate whatever you want. If there's no use case for it, does not matter. So it is incumbent on whoever the builders are, whether they are bank tapped builders, whether they are Web3 native builders, you have to build something that has utility to a much broader audience than what is in crypto today. And both parts of those equations have to be true, or else none of these are ever going to overtake US dollar stablecoins.
I think the fact of the matter is that a lot of I do struggle with the need for non-dollar stablecoins, and especially in Asia. And not because there's no need, but because it's actually less efficient. Like if you spend a lot of time in Asia, the fintech platforms essentially, so electronic money has been here for a very long time. Like if you go to China, for example, you don't even need to carry cash around with you. Same in Singapore. For most parts of like Thailand, Japan, Tokyo, Japan as well, Korea, you kind of like get around with just like going on fintechs. And I mean that essentially is the stablecoin promise, right? Money in your wallet that you can kind of buy investments with and shares from your wallet. And for most of Asia, that's already a reality. So what does the stablecoin really do that changes that in a material way? I struggle to see that. So until that is become until like something causes stress in these markets to make people trust the fintechs less, it's going to be very hard to supplant because they're literally part of everyday life. Like in China, your super app is where you book your taxi, you pay your bills, you chat with your friends. Like, why would I introduce friction on that by having an RMB stablecoin? It's unnecessary in some of these markets actually.
When we talk about other stablecoins and other fiats, do you see them as like a threat to change the whole stablecoin and one dominate above USD, or you see that as a niche for every country? The other day I was talking with a friend and he said, "Oh, yeah, BTC is in 92," and I'm like, "No, it's in 105." And after 5 minutes of discussion, we realized he was talking in euros. I live in Europe, and I was talking in dollars. So I never thought that he was thinking of it in dollars, but on euros. So do you think it could be a market for like niche people that want to trade in their local economy to understand it better? Or do you think we're talking about a global player that's going to take the whole industry, same as the USDC has done or USDT?
I have to be very careful how I answer this question, given I hold a U.S. passport. But of course, I've been out here in Asia and I'm building an Asian protocol. The reason why, there's a number of reasons why, as long as the US dollar is a reserve currency of the world, of course, the US dollar will always be the primary means of a lot of settlement of any transaction. The reason why even Bitcoin started was because there are many economies where they can't trust their own local currency. And that's the reason why something that's a stable store value, whether it's Bitcoin, whether it's a stable coin, has value. That is a little bit different from how do people interact on a day-to-day basis? And it's a little bit to Cholo's point. Do people in the Philippines pay using US dollars? No, they pay using local currency. Now, the question is, are there gaps in the system with which they need that payment to be in the form of a Philippine peso stablecoin, as opposed to another fintech solution or just cash, like Philippine peso cash? That will be the determinant in each market, because everything has to be compared with, what is the state of the world today, and are there inefficiencies and are there gaps? And that's the only way that any innovation is going to penetrate, PMF. So I think it's hard to say, and this is from a consumer perspective. From a government perspective, this is really getting into like geopolitics and macro. That's how do you want to control your currency? And it is very clear that the US is now using stablecoins as a way to perpetuate US dollar dominance. Do other governments see stablecoins as an avenue to try to fight back and try to establish more of a global relevance for their own currency? So I think there are multiple layers here. It's actually fascinating to watch it play out. I do think that you will start to see different pockets of different types of stablecoins for different niche use cases. And I think it's impossible, just given the way that the world is going and geopolitics is going, to say that one there's ever going to be one winner, because that's just not the way that trade is going to begin with.
The only stable coin, if you ask me, is Bitcoin. One Bitcoin will always be one Bitcoin, and like the fiat their price might go up with that one Bitcoin as their fiat gets devalued, but your one Bitcoin is always one Bitcoin. And I think that to Patrick's point, it kind of is leading towards that. I think I've spoken to many of my friends who are not in crypto, like based in like Philippines, Thailand, where they were holding their assets in dollar-based assets, and like those currencies have actually appreciated against the dollar in this year. So it'll take time, as Patrick mentioned, but slowly they're going to unwind this notion that the dollar is the safest asset out there, and people will start wanting to hold assets. I mean, people already think about their net worth and their money in their own local currency terms. It's just that dollar has been the best place to hold it for the last 5 or 6 years. That's no longer the case. It's not a safe assumption. And I think people who are not in the U.S. Come to this conclusion much faster, and then they'll start moving their money much earlier than people in the U.S. So, whether that manifests itself in more stable coins in the market, maybe less TVL for dollar-based stable coins, maybe that manifests itself in like just a move into Bitcoin or like other equity markets where people want to park their cash. It is, I think, it's a very hard game to predict, but I would say that this last couple of months has been a wake up call for people who thought dollar is never going to go away. And I think that assumption is being tested very very much over the course of this year.
Absolutely. I love that Bitcoin price is king. We've reached the hour and we're going to finalize with some rapid questions. This section is really for anybody who's haven't seen us before. This section is just quick questions. They don't necessarily have to be about any specific subject, and they need to come up with answers, whatever they come, like first thing it comes to your mind. So let's start. Are you a cat or dog person?
I'll answer first. Mine is easy. I'm a dog person. Always have been. I love my dog memes. Patrick's owned both, so he's gonna. I don't know what he's gonna answer.
That's exactly the reason it's hard for me to answer, because I'm a dog person that doesn't currently own a dog. I have 2 cats right now, but I'm a dog person.
We remember that was worst investment. Quick question last time, right?
Samoy all the way.
Nice. Would you invest in a Circle IPO? Yes or no?
Yeah, I'm a yes. I as a I'm a Coinbase bag holder. Just for me, it's actually further leverage on on my crypto holdings, but of course, because I support the space, so absolutely, yeah, I'm a buyer.
I wouldn't buy it on the IPO. I think there's a whole history of IPOs in the US that crash on or drop on the first day. So I'll buy it like within the first week. But I would buy it because, yeah, I mean, a bet on them is a bet on crypto doing well. So can't bet against our industry.
You heard it here. 25 is overpriced.
Oh, not FA,
this
not
is
FA.
this is not investment.
They've got good underwriters. You've got the good folks at JP Morgan City are a fantastic team. So I'm sure they'll price it well. I think Goldman's in there now too.
Very good. Predicted month that Monad will launch.
Ooh.
Monad is the question. Monad mainnet.
Yeah, Monad mainnet.
Ooh, I don't think I can say.
Guess the month. Guess the month.
2025.
We can skip if you wish.
Yeah, I don't know. You can answer that.
Very good. Launch price of NFT, our NFT. This is straight from our community. On testnet, the X when we mint them.
Oh, okay, so testnet or mainnet?
Testnet.
It's kind of in the community's hands, no? They have to decide where they want to list their thing.
Yeah, but there's going to be a floor price.
Hey, I've seen.
No short of first day.
I think one of Toon's NFTs went for like 20,000 mon. So let's set a low floor price at 5,000 mon. So I think let's start there, community. 5,000 mon.
5,000 mon. We have some community that definitely have that purchasing power, so I can see that happening.
I know. I go for affordability. 5 mon. And go
5 mon. 5 mon. I'm gonna sweep the market, even though I don't have any mon. Favorite color?
Favorite color? Mine is green. Green candles all day, baby.
Mine's boring. It's navy because it's also like Merrill, but navy is Merrill blue. So for those that know what RGB is, it's 02892. That's my favorite color.
I'm sure our designer Erdi would know what you're talking about. And last one, which sport you like to watch?
Oh, it's NBA Finals on Friday. NBA Finals on Friday. I'm still an NBA basketball junkie. So go Indiana Pacers.
Nice one.
I love sports, so I do watch a lot of sports. I will say my favorite nowadays. I like boxing, even though I know it's a rigged sport. We are both big fans of Manny Pacquiao. And he's fighting again. I proudly hang a signed pair of like boxing gloves for Manny Pacquiao actually in my house. So I'm forever a fan.
Awesome, that's great. Well, with that closing remarks, that was amazing, guys. I really enjoyed today's. I think we learned a lot. Would be great to to see some developments of these news because I think on all of the topics we've been talking, there's gonna be some things yet to come and yet to be discussed and yet to unravel into some fantastic things. Thank you for your time. It's always great to learn from you. And thanks for everybody who's watched. We reached 234 live audience, so fantastic. Let's aim for the next one to break our 500 mark. Thank you, everybody. Thank you, guys, and have a good night.
Until next time,
Gmu.
cheerio.
Gmu.